Hey guys! Welcome to another financial accounting tutorials. In this episode, we will tackle about intangible assets. Guys, have you ever wondered what's behind the success of many supergiant companies like Jollibee or Microsoft or Google? Isn't the Chicken Joy just another fried chicken similar to those sold by carinderias or food chains without the name Jollibee attached to it? Or Google as just one of the multitude search engine in the internet? Or why can't other firms copy the software that Microsoft offers so that they too can hit sky-high revenues that Microsoft has reached? In short, what makes this company stand out among their various competitors?
Sure, we can say that it's because of the assets that they hold that others do not. But what kind of assets are we talking about? What assets can be held by a firm that others are restrained to hold or sell? In this video, me and my Iglesia are going to enlighten you about such a mysterious but very important asset.
In defining intangible assets, all we have to put in our minds is the word or acronym WIN, as in W-I-N. The aforementioned companies used intangible assets in order to win in their respective field of business. Therefore, we can equate intangible assets as WIN. That is W, without physical substance, identifiable, meaning can be separated from other assets, can be sold, transferred, or licensed, and N, non-monetary, meaning not money or cannot be determined in amounts of money. As simple as that. From this, we can say that an asset is an intangible asset if it meets these three criteria. It is identifiable, as what I have said. There is expected future economic benefits arising from that asset. For example, revenue and cost savings from using such asset, and the entity has control over that asset. Therefore, can restrict others to experience its economic benefits just like the software produced by Microsoft. Let us first have a game. Tell me if the following assets are intangible assets or not based on the definition and criteria I have mentioned. Goodwill. No, it is not. It is intangible, but it is not identifiable because it cannot be sold, transferred, or exchanged separately. Another, Microsoft Windows sold by Microsoft. Yes, it is intangible and Microsoft has the legal control over it to sell. How about Microsoft Windows installed in computer units of Google? Not in the part of Google. In assets with intangible and tangible components like a computer, if the intangible component is an integral part of the asset as a whole, then it is treated as PPE. Windows, as the operating system of the computers, is an integral part of the latter. Thus, it forms part of Google's PPE. How about Microsoft Word installed in computer units of Google? Yes, Word is just an application of a computer. It is not an integral part of the latter. Thus, it is an intangible asset of Google. And how about customer loyalty? No, it is not. It is intangible, but it is not identifiable because it cannot be sold, transferred, or exchanged separately. Lastly, employee skills. No, it is not. Now that you know whether or not an asset is intangible asset, you might ask how you should record to recognize intangible assets. The number one thing you should know is that intangible assets are initially measured at cost. The measurement of cost depends on how the asset is acquired. Intangible assets may be obtained either externally or internally. Intangible asset is acquired or generated internally through self-creation. The generation of such asset is divided into two phases. One, research phase, wherein no intangible asset is recognized and expenditure on research is immediately recognized as expense. And two, developmental phase, wherein intangible asset is only recognized only if it is generated for use or sale, has probable future economic benefit, and it can be measured reliably. Otherwise, all expenditures are expensed immediately. All such expenses are recorded in research and development expense account by debiting research and development expense and credit cash. Those intangible assets recognized in the developmental phase are initially measured at cost, which comprises all directly attributable costs necessary to create, produce, and prepare the asset.
Example, Jollibee Corporation estimated expenditures for the following: internally generated brand 10,000 pesos, self-created masthead and publishing title 5,000, internally created customer list and order backlog 3,000, purchased goodwill from business combination 40,000, expenditure incurred to improve the acquired goodwill 15,000, internally generated goodwill 20,000, purchased brands, mastheads, publishing titles, customer lists, and order and production backlogs 100,000, expenditures incurred to improve purchased brands, mastheads, publishing titles, customer lists, and order and production backlogs 30,000 pesos. The requirement is how much of the expenditures incurred may qualify as intangible assets. The answer is only expenditures for purchased brands, mastheads, publishing titles, customer lists, and order and production backlogs worth 100,000 pesos is capitalized as intangible assets. The purchased goodwill from a business combination is also recognized as an asset, but it is accounted for separately. All the other expenditures are charged as expenses.
After the initial recognition of intangible assets, an entity shall choose as its accounting policy either the cost model or revaluation model to measure subsequent transactions concerning intangible assets. Under the cost model, an intangible asset, after initial recognition, shall be carried at its cost less any accumulated amortization and any accumulated impairment losses. For the revaluation model, an intangible asset, after initial recognition, shall be carried at a revalued amount, being its fair value at the date of revaluation, less any subsequent accumulated amortization and any subsequent accumulated impairment losses.
After we learn about what intangible assets are and how they are recognized, we now tackle deeper understanding on its amortization, impairment, their recognition, and lastly, how intangible assets are classified. So what or how is an amortization of intangible assets? Amortization is much like depreciation that allocates the cost of depreciation of the intangible assets over its useful life, the same as those other assets like PPE. So to be able to know how an intangible asset is amortized, we have to first know about the useful life of the intangible asset, whether it has finite or indefinite useful life. If the entity can determine the length and the number of production constituting its useful life, then it is considered finite. On the other hand, if there is no foreseeable limit to the period over which the asset is expected to generate net cash, then it is considered indefinite. Bear in mind that only those intangible assets with finite useful lives are amortized. The amortization of an intangible asset with finite useful life begins when it is available for use and shall cease when it is recognized or when it is held for sale. Its amortization is similar to those used in depreciation of PPE, such as using straight line method, wherein the depreciation amount is equal to the carrying amount less residual value divided by its useful life. Now, you might be wondering how intangible assets with indefinite useful life is treated. Know that they are not amortized since you do not have information as to the extent of their useful life, so they are just required to be tested for impairment at least annually. Speaking of impairment, an intangible asset is said to be impaired if its recoverable amount exceeds its carrying amount. The excess, thus, is recognized in the profit or loss as impairment loss. Usually, intangible assets are recognized upon disposal or when no future economic benefits are expected from its use or disposal. We have reached the last part of this discussion, which is the classification of intangible assets according to the purpose for which they are acquired. There are usually 5 classifications. Marketing-related intangible assets are basically those used in marketing or promoting its products or services such as trademarks, patents, copyrights, mastheads, internet domain names, and non-competition agreements. Let's have a look at some of the examples and how to account for them. Trademark or trade names. It may be a word, symbol, or phrase that distinguishes or identifies a particular company or product which cannot be used by others, just like the name of Jollibee attached to the Chicken Joy. Of course, other food chains cannot sell fried chicken under the brand name Jollibee. They have an indefinite useful life, thus they are not amortized but tested for impairment at least annually. The entry to record the acquisition of trademark through purchase is to debit trademark and credit cash or cash in bank. The subsequent entry to record the impairment loss is to simply debit impairment loss and credit trademark.
July 7, 1993, Jollibee Corporation purchased trademark for a total cost of 100,000 pesos. Other related costs include the following:
Cost of employee benefits arising from bringing the asset to its intended condition, 10,000 pesos. Professional fees arising directly from bringing the asset to its intended condition, 5,000 pesos. Cost of introducing the new product including advertisement costs, 3,000 pesos. The requirement is to compute for the cost of intangible asset for initial recognition. In answering such problems, we determine first its mode of acquisition, which is through purchase. Thus, the cost of the trademark include the purchase price of 100,000 pesos and any directly attributable costs, which are the cost of employee benefits, 10,000 pesos, and professional fees, 5,000 pesos, which both arise directly from bringing the asset to its intended condition. The cost of introducing the new product is expensed outright in the account advertising expense. Therefore, we initially recognize the trademark at its total cost, which is 115,000 pesos. The entry to record the transaction is to debit trademark 115,000, debit advertising expense 3,000, and credit cash or accounts payable of 118,000 pesos. Suppose on December 31, 1993, Jollibee assessed that the trademark's recoverable amount is 110,000 pesos. How to account for this? The 5,000 decrease from 115,000 pesos on initial recognition to 110,000 recoverable amount of the trademark is not due to amortization since it has indefinite life. The 5,000 pesos is treated as impairment loss, so we debit impairment loss 5,000 pesos and credit trademark 5,000 pesos.
The second classification is termed customer-related intangible asset, which basically arises from interactions with outside parties, especially customers. Assets of this kind include customer list, order, or production backlogs, and both contractual and non-contractual customer relationships. Customer list. If it is acquired or generated internally, the cost of which is expensed immediately, while if it is acquired externally by purchase, the cost includes the purchase price and any directly attributable costs. Subsequent expenditure on customer lists are, just like any expenditures on other intangible assets, are recognized as expenses. It is usually has a finite useful life. Thus, it is amortized over such useful life.
January 1, 2017, Jollibee Corporation acquired 2 customer lists for 50,000 pesos. Costs in acquiring the customer list include internal costs for 20,000 pesos incurred in generating a list, and the remaining are cost of purchasing a list. Both lists are expected to deliver information evenly for a 3-year period. Requirement: how much of the cost for the customer list is recognized as intangible asset? Again, we determine first the mode of acquisition of the 2 lists. The 20,000 internal costs are incurred to generate internally 1 customer list. Hence, it is not recognized as intangible asset but rather as an expense. The remaining 30,000 purchase cost is clearly incurred to purchase the other customer list. Hence, only the latter is recognized as intangible asset. So the entry is to debit customer list 30,000 pesos, debit expense account 20,000 pesos, and credit cash or accounts payable 50,000 pesos. Suppose that the reporting date is every December 31, so we account for the amortization of the customer list since it has a finite useful life. 1 year of its use is computed by dividing the useful life, which is 3 years, to the carrying amount of the list, which is 30,000 pesos. So the amortization expense is 10,000 pesos. Hence, we record debit to amortization expense 10,000 pesos and credit accumulated amortization 10,000 pesos.
Let's go to the third classification of intangible assets. As to its purpose, which is called artistic related because it involves ownership rights to plays, internet works, musical works, photographs, and audiovisual material. These works are protected by copyright, which gives the artist, author, or creator the exclusive right to reproduce and sell such work. Its useful life, however, may be finite or indefinite since its legal life is equivalent to the lifetime of such creator plus 50 years after his death. If it can be measured reliably, if it is finite, then its cost is amortized over its useful life. Otherwise, the cost of copyright is expensed against the revenue from the first publication of the copyrighted material. The fourth classification is what we call contract-related intangible assets, which represent the value of rights that arise from contractual agreements. Examples are franchise and licensing agreements, construction permits, broadcast rights, and service and supply contracts. Let's take a look at some of the examples. Franchise. We deal with this every day, such as Jollibee, the generics pharmacy, potato corner, etc. This is contractual arrangement under which the franchisor grants the franchisee the right to sell certain products or services, to use certain trademarks or trade names, or to perform certain functions. The cost of franchise, license, or permit includes the acquisition costs and any directly attributable costs, and may either have finite useful life, in such case the cost of which is amortized over its useful life, or indefinite, which is not amortized but tested for impairment at least annually. Subsequent expenditures on franchise or license is immediately expensed.
Finally, our fifth classification is technology-related intangible assets, which refer to innovations or technological advances. Examples of these are patents and trade secrets. Patents gives the inventor the exclusive right over a specified period of time to use, manufacture, and sell a product or process without interference or infringement by the others. It has a legal life of 20 years but can be extended by a new improved patent. Patents may be acquired through 1. Purchase, the cost of which comprises purchase price and any directly attributable cost, and 2. Internally generated or created, the cost of which comprises only legal and registration costs. Its cost is amortized over the shorter of its useful life and legal life. Other prior and subsequent expenditures such as litigation costs in defending a patent in cases when such patent is similar to existing registered patent are expensed immediately. If the defense in the litigation is unsuccessful, the patent may be impaired and needs to be written off as impairment loss.
On January 1, 2100, Jollibee Corporation started to develop a machine that converts water into a burger. Total cost incurred is 100,000. On January 1, 2200, they successfully developed the machine and acquired 20-year patent for it for a total cost of 900,000, of which 200,000 is spent for legal and registration costs. However, a man named Flint filed an infringement suit against Jollibee, claiming that he invented the machine in 2010. Jollibee incurred litigation costs of 50,000. Requirement: provide the journal entries. Since the patent is internally generated, the only costs recognized as intangible asset are legal and registration costs for the patent. Other costs incurred prior to the registration are expensed. Therefore, the entry to record the cost of developing the machine on January 1, 2100 is to debit research and development expense 100,000 and credit cash or accounts payable 100,000 pesos. The entry to record the cost of successful development of the machine and registration of a patent on January 1, 2200 is to debit patent 200,000, debit research and development expense 700,000 and credit cash or accounts payable 900,000 pesos. Notice that only the 200 legal and registration cost is capitalized as patent. The remaining 700,000 is expensed. Suppose the reporting date is every December 31, then we account for its amortization for the first year, the same as every year for 20 years if using the straight line method as follows. Debit amortization expense, which can be calculated by dividing the initial cost of 200,000 by the useful life of 20 years, which is equals to 10,000 pesos, and credit accumulated amortization 10,000 pesos. To record litigation costs, we simply debit legal expenses 50,000 pesos and credit cash 50,000 pesos. Note that all litigation costs are expensed immediately regardless of whether the defense is successful or not. If Jollibee is not successful in the litigation, then we recognize the patent as well as all the recognized accumulated amortization as follows. Debit accumulated amortization 10,000 pesos, debit impairment loss 200,000 less 10,000, which is equals to 190,000, and credit patent 200,000 pesos.
So that ends our video tutorial on intangible assets. We hope you learned and enjoyed this video. Have a nice day ahead. If you like this video, please give us some thumbs up and don't forget to subscribe.